Welcome to Investors Insights. Our topic today is 3 growth drivers. What we want to do today, as always, is to provide you information that allows you to understand how your portfolio can be impacted by the circumstances and events that are occurring. Agreed, gentlemen?
Agreed.
There's a lot of noise out there, and if we can bring certain points to you that make a difference to help you better understand, then this vlog is very worth it. So on that note, 3 growth drivers. Bobby, you brought up some interesting points that talk about or relate to consumer spending, which can impact portfolios. Talk to us about that.
Great news for Social Security recipients. For the first time in 6 years, Social Security checks will be going up. Now, it's only going up about 2%, really about $28 to $30 per check, but that's great news. Again, for the first time in 6 years, Social Security is going up. And that's very important because for the past couple of years, we've had no inflation. And for the Social Security checks to go up, you need cost of living adjustments. That's based on inflation. Inflation has been flat. And so for the first time in years, obviously, 2017, we're starting to see some good inflation numbers.
Right. And on that note, we're in certain areas of the economy, we're seeing consumer spending increase. And that's been a very positive on that. Now, on the other side, and perception is reality, I guess I can say that, Trey, you talked about corporate earnings. Talk to us about that.
That's right. We've been looking forward to corporate earnings season starting for a few months now because the first quarter's corporate earnings came in at a 15% growth rate, which beat expectations, and we saw the market rally on that news. So corporate earnings started last week with a bang, with the financial sectors handily beating expectations. The second quarter earnings are projected to grow at 6%. That's a great growth rate considering we had 5 quarters of negative earnings growth leading into this year.
Sure.
And so if we can get corporate earnings not just growing, but growing faster than we expect, that should lead to good market performance going into the second half of the year.
Right, and corporate earnings could eventually override any interest rate increases we're seeing, correct?
Exactly. They grow fast enough, the interest rates are a moot point.
All right, that's exactly right. Now, let's talk about interest rates going up, but also then let's talk about something that everybody's focused on that may come down. It hasn't happened yet, and that's taxes. Talk to us about that, Ashley.
Correct. As we said on the vlog 2 or 3 months ago, the tax plan stalled. What we really need to do is install it. And you don't have to politically take all of it. The tax plan is easier than Affordable Care in that you can break it apart. But when we were looking at it, if there are 3 things that you could get passed, one is a 15% business tax on owner-managed and large business, along with an immediate expense of a large capital item, large machine, factory, what have you. Right. That's one. The repatriation tax, bringing tax revenues back in the United States, if you hit that at 10%, that would flow that back in. And then if you simply just double the standard deduction, either single or married, if you did those 3 things, it would have major impact on the economy. Specifically, our growth rate is more in the 2.4 to 2.5% range. If you can get it elevated above 3%, a lot of good things happen. Deficits drop, tax revenues go up, people are more confident. That's one of the best things that we could do going forward.
Right. So on that note, we want you to understand we're seeing consumers have more money in their pockets. Yes. At the same time, corporations are having more money to work with from their earnings. Right. And moving forward, if Congress will move on the whole tax issue and we see taxes come down, that would be a huge positive for portfolios in the markets as a whole. Everybody in agreement on that? Yes. On that note, please continue to follow us on Facebook, Twitter, and LinkedIn. And also, we want to thank you for the emails, the phone calls, and in our meetings, the comments that you made about our vlog and about how we're touching base with you on topics you're interested in. Keep those coming along with those questions because we want to continue to respond to them and have that dialogue. Have a great week, and we'll keep you updated.